SPDR ETF wrap-up, and this wrap-up is for Wednesday, the 17th of August, 2022. FOMC minutes day. All the other data didn't matter to me today. That's what matters. What's the Fed saying? How did they feel? I think you have to walk away from it thinking there's a bit of dovishness there. Yes, the initial talk, I'm going to be a hawk and we're going to address it. But underneath it, you keep reading in those minutes, you see they don't want to go too far. They want to control the beast. They want to be data dependent, just as they said. They're looking around at the environment in the world as well. They realize there's things they can't control. But what they can control, it just seemed to me, I could be wrong, a bit of a dovish slant to it. Yet the stock market was down on the news. So got to put it all together. When are we going to get a better feeling? I'll tell you, I have the secret. August 25th. Where'd I come up with that? Oh, I forgot. That's the Jackson Hole Symposium start for the 25th, 26th, 27th. And who's going to be there? Oh my gosh, central bankers. This is not Davos. This is about central bankers. It's going to get wild next week as we start seeing what is said, how it's said around the world. These are the big boys, and what we walk away with. I think that as a group, you're going to see it's a lot more bearish, hawkish when they're talking there than what you read in these minutes. That's my own take on it and what I'm expecting. All right, so let's talk about the market. First, Apple, which was up today, one of the few. Notice all the red around me. Up, September 7th release date. They always do it in September. It's an early release date, so the market's charged. I'm going to be calling my provider, ordering my phone. I'm sure they won't take the order yet, but I want to get rid of mine. I have the 10, so I don't do what you rich people do. I keep it 2 or 3 generations, and then I'll move up to the next one. I really didn't need from the last one a better camera and battery. Didn't matter. I have chargers. What's the difference? Freeport, on the verge of a problem. Let me explain it. If you look at the market, if we take out this area right here, you could end up with lower highs, lower lows. Carrying the market where becomes my question. To get under that, you'd be under the 18-day average of closes, so it opens the door for a potential move if you break through 2976 of 2778. More important, I still think you're going to be stuck in the sideways action. I think you're going to be caught in the Bollinger Bands for a while. Momentum, turn down. Action. The bias is up, the swing line is down, and momentum is down. Difficult chart to make anything out of. AMC, you know my feelings on it. I realize that the chairman is doing his best to talk to everybody and the investors that are embedding in it. I don't see how they overcome all the debt they have. I see that at the end of August, beginning of September, I expect that the volume of traffic does this, and we go back to what I know is the norm. Maybe you hold a special night on a Tuesday to get people in at a discount, and you're back to the weekends hoping. So be careful. I don't like movie theater stocks. I think this is a nice rally off the summer business, and be careful. Apple. I'll keep my eye when you lose the embedded reading, then this rally comes to an end. Until then, I don't know where it goes. Going to be a lot of bullish news coming out day after day for this release. What's the phone price going to be? What does the final product look like? It gets everybody excited. Not a time to be bearish when you've got that coming at you. The next thing is Disney, and of course it's the same thing. You've got your bullish readings. What I'm doing is focused so much on these slow stochastics. I cannot tell you how focused I am on them right now. They are telling me that these markets are still good. Now, do you ever buy over a Bollinger Band? The word is ever. Never. How many days did you have over it? Well, if we look at this 1, 2, 3, 4, I could even go back here. I don't think it was over it. And today it gets back in it. That's normal. I saw one of these charts recently. It had 6 days where you were over it. I'm telling you, you're looking for a problem. Something else on all these charts. Let me come back here. 200-day average. That could be where this finally peaks out. Be careful. That to me is an important number. What else about Disney? Oh, I forgot. The seasons are changing. The kids are back in school, like in Illinois, not in Chicago yet. but our surrounding areas. I see that in other parts of the country, it's the same thing. You're going to tail off there from the parks. That doesn't mean that their streaming services and other businesses won't hold up, but I still would never buy over a Bollinger Band. XLF, between here and that 200-day average, I'm looking for a peak. It's market after market, and I'm watching the slow stochastic. I am bullish in the bull camp until that is lost. Now, my paid subscribers see that I've added something to that in teaching what's in my enhanced Bollinger Band course. It's a question of a main moving average to enter that I never show on these charts to you. It's what my paid subscribers see, and how many times you hit it and how many times you go to the well to buy these markets on the hit. I've done studies on that. You're getting to the point where it's dangerous. That's what I'm trying to say. Another embedded reading. You're over the 200-day average. I'm looking for a test of that number right away. It is rare that any market goes to that 200-day average and doesn't pay attention to it. Look what you did back here when you hit it. You got over it for a day or two and then down. What are we doing here? I wouldn't be surprised if we want to back off a bit. You've also got the same thing, the Bollinger Band up here. You lost the embedded reading, but it went right to its objective, the 18-day average of closes. No trend, but the slow stochastic momentum trade is gone. Just like it was lost here, it tried to re-embed and lost it right away. So this chart innately is starting to weaken. That's how I'm looking at it. Not bearish yet, but starting to weaken. Homebuilders, okay. I think you're going to lose the embedded reading tomorrow, which sets up the potential to come back to the 18-day average. If it keeps going up, I still say that the 200-day average is going to be an awful lot of resistance. We then get to the energy sector, and I just see this market back and forth here. Everybody's doing this. They're on pins and needles, waiting to see what the Biden administration does with the proposal that Iran delivered to the European Union and the UN and other people about getting back into the nuclear treaty. If Biden goes, he can't meet the Iranian demands. If he does, you might as well say goodbye to any shot of the Democrats winning anything, and not only this upcoming election, but it'll be for the 2 years from now for the presidency. He's got his hands full. The world wants the Iranian oil badly. 2 million barrels a day could be coming at you. I just saw Goldman report for 2023. They had forecast $125 a barrel, but it can fall by 5 to 10 if Iran comes back in. So far, Goldman's got mud on its face because they've been bullish as can be, and oil prices have been dropping. Their argument is still the backwardation and what's there. And now we're starting to hear from the IEA and others that there could be a supply issue coming to us in the fall. We're not there. We're in the summer right now. Gold lost its luster, gone. Look at what this market did. Can I show it? Not. Yeah, it's allowing me. Great. Here it's embedded. You lose that reading, the odds are you're going to the 18-day average of closes. Learn how to play with this. Learn the rules I have in the enhanced Bollinger Band course. I don't show them all to you here. I show them in the subscriber videos because I review it continually. I mean, it's such a neat tool. Same here. Overbought, not embedded, and you're back to the 18-day average. You may be opening the groundwork here for 24.82. Everything's bearish now until you take out the highs right back here of this day, which was yesterday at 26.78. You have to take that out to negate the bearishness. If you don't, still down. COPEX rolling over. So if Freeport can hold up, that's why I brought that up. If you start taking out right here the 30.80 level, watch out. I think that's 30.80. Let's just double check it together. It's 31.22. That's the number right there. That's number I think I did that wrong. I said 31.22. It's the wrong number. It is 30.60. See the low? 30.60. So if you take that low out going forward, you'll probably quickly be at that 18-day average, and I think Freeport would probably start breaking down a little bit. We'll see if I'm right or wrong, okay? I have no money betting on it because you're over the 18-day average, and that's not where you start coming into those. AGG, you tell me what this market did. To me, it did a pretty good job of getting right down to the Bollinger Band in an oversold market. It's been in a no trend and finally entered a downtrend yesterday, and today cracked loose to that number. What do I think the pros are doing at that number? Covering their shorts. UUP is without trend and I think stuck in the Bollinger Bands. Back and forth, overbought. I don't see anything to do there. And summing it up, FXE. If the market decides to take out 93.82, I think you'll be at the lower band like that, but I do think you're going to be stuck in those bands for a fairly long time. So you put it all together, interesting markets, more to come, and realize we're in the dog days of summer, okay? A lot of traders are gone. Volume's going to be lower. Don't think they're coming back from their vacation between now and Labor Day and saying, oh, I can't wait to get involved. Nonsense. I've been around this my whole life. It's not quite how it works. They come back after Labor Day into the market with a much more serious attitude. But you hear me talking about Bollinger Bands. Look at this.